The gig economy. Illusion. Why freelancers are getting extracted. Thinking freelancing means freedom and more money? Think again. Many 1099 workers are quietly losing thousands to taxes, insurance, and hidden expenses they never counted. In this video, we reveal the shocking financial reality behind the gig economy and show what you really need to know before leaving your 9-to-5. Michael left his corporate position about 7 months ago. At the time, he was earning around $72,000 a year as a full-time employee at a digital marketing company. His job came with all the traditional benefits most workers associate with stability: health insurance, a company retirement plan with matching contributions, paid holidays, and regular paychecks arriving every 2 weeks. From the outside, Michael's situation looked secure and predictable. Friends and family often told him he had a solid career, but internally, he felt restless. The routine began to feel repetitive. The growth opportunities seemed limited, and the daily structure made him feel like he had little control over how he spent his time. Like many professionals in their early 30s, Michael began dreaming about independence. He imagined working on his own terms, choosing the projects he wanted, setting his own schedule, and potentially earning more money by working for himself instead of a company. Then an unexpected opportunity arrived. A recruiter contacted him with a proposal that sounded almost perfect. The work would be very similar to what he already did, managing digital marketing campaigns and social media accounts for business clients, but instead of working as a traditional employee, he would work as an independent contractor. The recruiter explained that the contract value would be around $98,000 per year. That number immediately caught Michael's attention. Compared to his previous salary of $72,000, it looked like a significant increase of about $26,000 annually. In percentage terms, it seemed like nearly a 36% raise. On top of the higher income, the recruiter emphasized the freedom that came with contract work. Michael could work remotely, set flexible hours, and essentially operate as his own boss. To him, the opportunity sounded like a dream scenario: higher income combined with greater control over his lifestyle. Without overthinking the details, he accepted the offer and stepped into the world of independent contracting. About 7 months later, Michael decided to carefully review his finances. What he discovered was surprising and honestly a little unsettling. Even though his contract rate was technically close to $98,000 annually, his actual financial situation looked weaker than when he earned $72,000 as a traditional employee. He found himself working longer hours, constantly worrying about medical insurance costs, and realizing that he no longer had retirement contributions automatically growing in the background. Many benefits he once considered normal had disappeared overnight. And when he added together taxes, insurance payments, lost benefits, and new business expenses, the impressive contract rate suddenly looked far less attractive. Michael's experience is becoming increasingly common as more people enter the gig economy. Over the past decade, millions of workers have shifted from traditional employment into contract-based work. On paper, many of these roles appear to pay more than standard salaries. However, the financial structure of contract work hides several costs that employees rarely think about while working inside a company. When workers move into freelance or independent contractor positions, those costs shift from the employer to the individual. Without realizing it, people can accept contracts that look like pay raises, but actually reduce their total compensation. One of the biggest surprises Michael encountered was self-employment tax. While working as a full-time employee, part of his paycheck automatically went towards Social Security and Medicare taxes. Those taxes total about 15.3% of income, but the burden is shared between the employee and the employer. Michael personally paid about 7.65%, while the company covered the remaining portion. Once he became a contractor, that arrangement changed completely. Independent contractors must cover the entire tax themselves. During his first 7 months of contract work, Michael earned around $57,000. That meant he owed nearly $8,700 in self-employment taxes alone before even calculating his federal or state income taxes. Compared to what he previously paid as an employee, the difference felt enormous. Health insurance was the next major shock. At his old job, Michael paid roughly $270 per month for his health insurance because his employer covered the majority of the premium. What he didn't fully realize at the time was that the company was actually contributing several $100s each month on his behalf. After becoming an independent contractor, he had to find his own insurance plan through the individual marketplace. Even though he was young and relatively healthy, the plans available to him were much more expensive. The most reasonable option he found cost nearly $560 per month and still included a fairly high deductible. His healthcare expenses had more than doubled. Retirement benefits created another hidden financial gap. While working at the marketing company, Michael contributed about 5% of his salary into a retirement plan. His employer matched those contributions up to the same percentage. In practical terms, every dollar he saved was instantly doubled by the company. Once he switched to contract work, that benefit disappeared entirely. Although he could still contribute to retirement accounts like a solo 401k, every dollar now had to come entirely from his own income. Maintaining the same savings level required much larger personal contributions. Paid time off was another benefit Michael suddenly lost. As an employee, he received around 16 vacation days plus several paid holidays each year. That added up to nearly 4 weeks annually when he could relax without losing income. As a contractor, any time he stepped away from work meant losing billable hours. Earlier in the year, he took a 10-day trip with friends. When he returned, he realized he had lost nearly $2,400 in potential income simply because he wasn't working during that period. New operating expenses also appeared almost immediately. While working at the company, Michael used office equipment provided by his employer. His computer, software programs, workspace, and technical tools were all included as part of his job. As an independent contractor, those responsibilities shifted directly onto him. He purchased a new laptop, subscribed to professional marketing tools, upgraded his internet plan, and set up a small home office with proper furniture and lighting. During the first year alone, those costs added several $1,000s to his expenses. Another challenge he didn't anticipate involved time management. As an employee, Michael focused entirely on the creative side of marketing work. But as an independent contractor, he discovered he had to manage many additional responsibilities. He spent hours each week sending invoices, tracking expenses, updating spreadsheets, communicating with clients about payments, and organizing documents for tax purposes. None of that work was billable. It was simply part of running a one-person business. Income stability also changed dramatically. When Michael worked as an employee, his paycheck arrived like clockwork every 2 weeks. As a contractor, his income depended on project timelines and client budgets. Some months brought strong revenue while others felt uncertain. At one point, a client paused a major campaign, reducing Michael's monthly income by nearly $2,000. That sudden drop forced him to dip into his savings and reminded him how unpredictable freelance income could be. Another factor he hadn't considered was professional liability. While employed at the marketing firm, any legal issues related to his work were typically covered by the company's insurance policies. As an independent contractor, he personally carried the responsibility. If a client claimed that a marketing campaign caused financial damage, he could potentially face legal consequences. To protect himself, Michael purchased professional liability insurance, which added yet another recurring expense. Taxes also became more complicated than he expected. While working as an employee, tax withholding happened automatically through payroll deductions. Filing taxes each year was relatively simple. As a contractor, he now needed to estimate quarterly tax payments, maintain detailed records of expenses, and ensure everything was properly documented. Because he felt uncertain navigating the process alone, he hired an accountant for professional help. That decision reduced stress but added another annual cost. From the company's perspective, shifting workers into contractor roles can be extremely beneficial financially. Businesses avoid paying benefits, payroll taxes, and other overhead expenses associated with traditional employment. Instead, they simply pay the agreed contract amount and leave everything else to the contractor. For companies managing dozens or hundreds of workers, those savings add up quickly. For workers, however, the long-term consequences can be significant if the numbers are not calculated correctly. One of the biggest risks is falling behind on retirement savings. Without employer contributions and structured savings plans, many contractors unintentionally save less for the future. Over time, that gap can dramatically reduce the amount of wealth built through long-term investing. Looking back, Michael realized the biggest mistake he made was failing to calculate the true contract equivalent of his old salary. Many financial experts recommend multiplying a traditional salary by about 1.45 or even 1.5 when converting to a contractor rate. This adjustment accounts for taxes, benefits, insurance, and other expenses that employers normally cover. Based on that formula, Michael's $72,000 salary should have translated to a contract rate closer to $105,000 or even $108,000 per year, just to maintain the same overall financial position. The lesson from Michael's experience isn't that contract work is bad or that freelancing should be avoided. For many professionals, independent work offers incredible flexibility and income potential. The key difference is understanding the full financial structure behind the opportunity. Contractors must price their services high enough to cover taxes, healthcare, retirement savings, business costs, and the time required to manage their operations. Anyone thinking about leaving a full-time job for freelance work should first calculate their true total compensation as an employee. That includes salary, employer-paid benefits, retirement contributions, insurance support, and paid time off. Once those numbers are added together, the real value of employment becomes clearer. For people already working as contractors, it may be necessary to reevaluate pricing and adjust rates accordingly. Many freelancers charge far less than they should simply because they underestimate the true cost of independent work. Increasing rates, finding higher value clients, and treating freelance work like a real business rather than just a job can significantly improve financial outcomes. 7 months after leaving his corporate role, Michael continues to evaluate his options carefully. The independence he once imagined has come with new responsibilities and unexpected financial pressure. Whether he decides to renegotiate his contract rates or eventually return to traditional employment, his experience highlights an important lesson that many workers only discover after making the leap. The gig economy often promises freedom and higher earnings, but those benefits only appear when the numbers are fully understood. Without careful planning, what looks like a major raise can quietly become a financial setback. In the end, success in independent work isn't just about talent or effort. It's about understanding the economics behind the opportunity and making sure the numbers truly work in your favor.